Welcome back, and joining us on the show now is Sachin Jain. He's CEO, India World Gold Council. Sachin, hi, thank you so much for joining us. Interesting times as gold is near all-time highs. But even with that, the global and Indian demand has seen a percentage increase in the first quarter. And by the way, many congratulations as you take over World Gold Council.
So as you would mention that globally, the demand has gone about 3%, which totals to about 1,238 tons. Very strong, and a similar increase or strength we've seen almost in 2016 first quarter. So it's a pretty good start for us. But what's still this demand? What's still this, what are the broad pillars on this demand? We see a very strong interest on the OTC side, on bars and coins and that side of area. China really led that area in the demand. We see a consistent, persistent demand from the central banks, where China, People's Bank of China, Reserve Bank of India, and Turkey Bank, and a lot of other banks have bought. And the other area that we've seen is that this really, again, on these central banks, almost 290 tons have been bought, which I guess has been a record high ever in the first quarter that we've seen before. Now, look at the gold jewelry demand that we've seen in first quarter globally. Even with such high prices of gold, the gold jewelry demand has only gone down by 2%.
Absolutely. Even as these all-time high prices, one would think that people would perhaps stay on the sidelines, but the investment demand is 19% higher.
Yeah, so Manisha, this 19% is largely dominated by gold coins and bars, and that's purely physical gold that we've seen sort of moving into the market. And the 19%, as I said, has translated into almost a 32 to 33% increase in the value of this segment. And as I said, that one is the transparency and the confidence on the bars and coins, but also the ETFs in particular, the AUM has gone up by 4 tons in this quarter. And we foresee that more and more financializations of regulated products like ETFs will become more popular and acceptable. And the other area is that while we've always believed that if you look at a healthy diversification of a portfolio, gold till between 7-8% to 15% is a good hedge, and we always say that a good balanced portfolio should have about 10% of gold. We've seen the ultra and HNIs really investing and matching up to that number or even more. So it's
Absolutely.
really around that area.
I also want to understand about the fact that, when you look at the gold prices surge sudden or gold prices trading at an all-time highs, which is the case right now, not too many people encashed gold even at these highs. The recycling number is just about 10% higher.
I think, Manisha, you're spot on. The 10% is not been historically high. And the reason is that there is a high confidence on the metal itself. So even if you deep dive in what happened to the 10%, particularly looking at more rural markets, tier 3, tier 4 markets, where historically, whenever the prices have gone up, as a jeweler, you will have to increase your liquidity to be sure that if somebody walks in and to encash gold, you should have the liquidity. What we've seen different this time around is that most of the recycling is not to encash gold. It's also just to come to exchange gold to a gold product, maybe more traditional jewelry to a more newer or a contemporary jewelry. That's what we've seen. And that's clearly reflective that the consumer or the end clients still want to remain in the category, and this confidence that this price is here to stay, and it's not just a blip.
Okay. One thing good is that we are off the all-time highs, and next week is Akshaya Tritiya. Would you say that the prices at these current levels would help the demand?
And Manisha, it's a good question because Akshaya Tritiya, which is such an important event in our Indian calendar, is around the corner. And historically and even otherwise, when the prices are very high, the jewelry demand tends to get impacted negatively. And I think with this correction that we've seen over the last week or so, if it continues in the next couple of weeks, will be a good thing for the industry. Our broad estimates for 24 from our perspective is that the consumption of gold in India would range from 700 to 800 tons. If the prices go very high, and volatility keeps increasing, that might be in the lower side of 700. But if there's more stability, if there's more sort of continued or sort of a stable growth that we foresee should also happen, then it will be on the upper side of 800. So that's the outlook for the year. But back to your question on Akshaya Tritiya, I think the preparation from a jeweler's perspective is very strong. And this correction will certainly help consumers coming in the front doors and really celebrating what Akshaya Tritiya really means. The starting of new things, the starting of new gold. It's also a rock solid investment that you make in gold.
All right, all-time highs or not all-time highs, 700 to 800 tons of import every year is something that India continues to see. A final question then, Sachin, and the sector clearly seems to be turning around. I mean, we've seen more transparency, hallmarking, more store openings, expansions, and then, of course, so many IPOs which have already come in and so many more in the pipeline.
I think, Manisha, it's very satisfying to see how our industry is getting more, I would say, regulated, more IPOs, as you mentioned, which means that we can stand behind a very clean business. And I foresee more of this coming into the years. And that completely connects to how consumers will look at our industry, how the regulators will look at our industry, and generally creating that ecosystem that gold is a great industry to be in. And hence everybody looks at us from a transparent point of view and other things. There's a lot of initiatives that Gold Council did over the years, which are fructifying, but we're also working on the next phases of how we need to look at an industry. So to name one of them, we think that as our industry, we need to have a self-regulatory organization and really uplift our code of conduct. And those are things that you'll see coming through. And I can tell you that the industry has absolute openness to really work together and to uplift what we are known for, what we are capable of. So I think the time, the phase of what we are, as what I told you before, gold being the new gold. I think in this phase, you will really see a complete upliftment of the way we conduct businesses, the way we conduct, transparently and give more confidence to the regulator, to the world around us, how we responsibly behave for a more socially balanced world, more eco-friendly world. And at the end of it, a consumer will feel proud consuming gold from apartments.
All right, Sachin, thank you so much for joining in and giving us that outlook on gold. And as Manisha said, congratulations once again to be elevated to the position of CEO India World Gold Council. Manisha, thank you so much for joining in and taking us through this sparkling conversation, if I was to say that. Just before we slip into a short break, pull up Rane Breaks.